The time is just gone 13 minutes past 8 a.m. and we kick off this morning taking a look at the economy in general, looking at inflation specifically, and with reports having worldwide recession fueled by inflation. Where are we at this point in time? What is happening? We are joined now by Professor Patrick Bond, University of Johannesburg's Department of Sociology. Professor Patrick Bond, good morning to you, sir. As always, we appreciate your time and welcome to the show.
Salam alaikum. Nice to be with you, Emir. How are you?
Yes, doing very well, Prof. But the key problem that we are faced with in South Africa, and we've just seen, we know that the monetary policy meeting again, we've seen 75 basis points with interest hikes once again. And Stats South Africa reporting food is up by 12.4% more expensive than a year ago. Non-alcoholic drinks 9.7. The price of hot drinks increased 14%. And so much is actually taking place at this point in time. Runaway inflation and this talk of a worldwide recession.
It's true. The World Economic Forum meeting in Switzerland, I'm sure the listeners were aware that South Africa was meant to be represented by President Ramaphosa, but because of the Eskom crisis, he didn't go at the last minute. And as a result, the team there, led by Enoch Godongwana, the finance minister, and a few of the business reps, but particularly the financial journalists, they're, I think, quite pessimistic, in spite of Godongwana always putting on let's say, a sort of optimistic approach, and, for example, saying without any sign of credibility that we'd end load shedding within 18 months. The sense is that South Africa exports raw materials to the world, and the prices probably have peaked. It may have even happened in May last year, and that as a result, our trade deficits. Remember the big problem where we were importing too much, mostly luxury goods and mining equipment and automobiles and things, and we weren't exporting enough. That problem has just begun to return. In October, we had the first trade surplus since COVID began in early 2020. And I think this, with the general sense in Davos of an impending global recession, puts the South African elites on the back foot.
Well, we're certainly on the back foot, and the key issue here is how much confidence can we instill, considering our very own problems here, our economic woes, the energy crisis that we are experiencing at this point in time, and particularly looking at foreign investors looking at South Africa. I mean, how much confidence would they actually have, Prof, in looking at South Africa as an attractive investment destination?
Well, let's just take two or three of those features: the energy supply, the political instability that we've been seeing, especially since President Ramaphosa's corruption problem emerged, and social unrest even in mid-2021, but also the local economy's health. All of those would send signals to foreign investors that this is not a good time to be in South Africa. The decline in the commodity prices is uneven, and the massive profits that we've seen by coal companies exporting increasingly to Europe, as well as traditionally to India, a little bit to China in recent years, but mostly that coal going to India and now to Germany, has raised lots and lots of money for the companies. There used to be companies like Anglo Coal. It's now a locally owned black-run business called Tongela, record profits, as well as Exxaro and the BHP Billiton subsidiary, South 32. So those big boys are certainly, cashing in with the high coal price. Platinum's a little less. The gold miners are doing great because the price has revived. And I think in those respects, they have to worry about two things. One is the bulk commodities like coal, manganese, iron ore, can they get from the mine to the port? And Transnet is unable now to secure, for example, only about two-thirds of its regular coal output, about 60 million instead of 80 million tons a year, now can get out through Richards Bay because of the cable theft and inefficiencies and sabotage and all sorts of things going on the Transnet line from Limpopo and Mpumalanga and northern KZN to Richards Bay. Likewise, there are problems with the electricity, which you need for not just the sort of deep mining, but the smelting for the platinum, for the gold. And the solution there seems to be, especially led by Sibanye-Stillwater, to try to get more renewable energy directly into their plant, but also what they call wheeling in. They supply it somewhere else in the grid and then bring it into their plant so they don't have as much load shedding. And those two strategies, so this export, trying to use trucks instead of the rail lines and using their own electricity, only goes so far. And then you've got the dilemma, the second dilemma, which is South Africa's political instability. Certainly Ramaphosa himself, a coal mining tycoon and representative of Western business interests, but who can ever forget his role in Lonmin, the massacre in 2012, but also representing McDonald's and Coca-Cola. So he's certainly seen as Western friendly. They've released vast amounts of funds and exchange control. So there's no real question about the current government's, let's say, desire to serve foreign investors. It's a very pliant government. The problem may be when they can't repay debt. Eskom is having some big problems with, kind of raising the money, and they have a 400 billion rand debt, much of it for Medupi, Kusile. These are two Skorokoros broken down and corrupt loans by a Chancellor House in Hitachi, well recognized as involving bribery. Vali Moose is then the chair of Eskom in 2007, but also sat on ANC Finance Committee, called out for what they said was improper conflict of interest in a public protector report. But the U.S. Foreign Corrupt Practices Act also nailed Hitachi for bribing our government in that deal which Hitachi had done with the Chancellor House. So there's a whole set of questions about, let's say, the integrity and the political ability of these leaders. Let's say Ramaphosa, he could only really settle down mid-2021 unrest, partly with some rhetoric about unnamed masterminds of an insurrection conspiracy. Never found any, but by giving the very angry society 350 rand a month in late July last year, 2021. And the question is, will they continue to do that, to have welfare payments? And Enoch Ganagwana has put on austerity. And then I think, the more general question of the economy, it's in a 1% sort of growth range without any real prospects of any improvements. And if the commodity prices keep going down and we have more trade deficits and then pay more for interest rates, then we have a much slower economy than we should. So if you're an investor, whether foreign or local, you're probably going to hold back and see where it goes.
Yes, Prof. Also, I see the strong connection between these issues that you've just mentioned, looking at the political instability, looking at President Cyril Ramaphosa himself, his position, his business interests, and you speak about the mining companies that are benefiting hugely as a result of export, and just looking at coal in particular, and looking at South Africa, looking at our energy crisis, looking at our economic woes. And some have actually suggested that why is there not a surcharge on these millions and millions of tons of coal that are leaving South Africa, A-grade coal, and using that surcharge to address some of the problems that we are experiencing internally? Because, we always hear about funding, whether we're talking about renewable energy, we're looking at Eskom, we're looking at the shortage of diesel, and also looking at the dire state of our power stations, the maintenance. There is no money. And so, now that we're exporting all these millions of tons, why is some of that money not coming in to fund some of the problems and address the energy crisis internally?
Yeah, I completely agree. I mean, the way in which royalties, taxes, or even the reinvestment by mining capital in infrastructure or in the housing, for example, of workers in mining areas, it's utterly inadequate. And we can talk about a looting process in which the depletion of those non-renewable resources far outstrips the benefits. Now, you can do that as an economist. I do that to assess what we call the Hartwick rule, how much gets reinvested in productive capital, right, so plant and equipment, how much in education, sometimes called human capital, versus the depletion of the natural capital. And South Africa is one of about 9 in 10 African countries that turn out negative. So mining does us much more harm than good if you take into consideration, as I'm sure you and your listeners will be the first to do in society, our future generations. And that means, shouldn't they have some of these resources underground? I'd also look at coal as a crucial problem, because when you burn it, it creates climate change, and our future generations will find it very uncomfortable. And as we saw in Durban last April 11, 500 or so died in the rain bomb that hit because of the climate crisis. We're really looking at South Africa being on the edge of turmoil and economic catastrophe. Much of South Durban just underwater in that rain bomb. Tens of billions of damages done, even just in one company, Toyota. And so the both victim and villainhood of South Africa in exporting coal to be burned, compared to doing something future generations would thank us for. They will need hydrocarbons. I'm sure you agree. And we cannot get away from lubricants and tarmac for our roads, or the necessary plastics and synthetic materials or pharmaceutical products, many things that come from hydrocarbons. And our generation is idiotic by just digging those up and burning them, creating climate crisis, instead of leaving them in a way that's for non-combustible uses, not for burning them. More intelligent future generation of your descendants and mine would say, look, let's use hydrocarbons properly. And I fear that the failure to put any sort of carbon taxes, it's only a tokenistic little, sort of 6 rand a ton if you're Eskom or Sasol. So that's roughly 35 US cents a ton. Sweden's is $132 a ton. The European emissions trading scheme, it's a bit of a casino, but it gives you a price of about $90 a ton. The Biden administration, $51, but probably going to $120 a ton this year. In other words, we're really ridiculous and tokenistic failure to do what you're suggesting, a surcharge that would mean a more rational use of our minerals, including coal. As for platinum group metals, for gold, we also have some strong potential sites for green hydrogen, which isn't non-renewable, coming out of water. But if we can have the green hydrogen, that is solar, that could break H2 from O and from water without all the associated problems, there may be some case that there be a sort of new technologies that are used for the new green economy. But even that I would distrust, again, because the companies involved, in this case Sasol is the main leader, is appalling. And if you look at it, it's factories, 2 big plants in Secunda and Sasolburg. Secunda is the biggest emitter of CO2 in the world. I don't know why we're supplying electricity, so they can squeeze coal using the old Nazi Fischer truck method and get a few drops of petrol when we can easily import it. And similarly with Sasolburg, a big refinery there. These are areas where Sasol has again and again shown it doesn't care about the local residents, about global emissions. And what we know it does with its money, it takes it to Louisiana in the U.S. where it's wasted it. And in fact, that was under the direction of one Andre de Ruyter when he was Sasol second in command. And these are the sorts of companies that I think really shouldn't have any license to operate. The next generation will be car power ships from Turkey, which are going to be setting up in Saldanha and Kucha and Richards Bay ports, very dangerous ways to, again, using fossil fuel energy. And then we're looking at Shell and Total and their local ally, Johnny Copeland, offshore gas exploration going on as we speak, with lots and lots of opposition, beach protests all over the country. So it's a very tense time, isn't it, for thinking about South Africa's resource legacies and what we do for future generations, because what we're doing now is absolutely unsustainable.
Well, Prof, as always, we do appreciate you taking time out and talking to us here on Salam Media. I wish we could have spoken a lot more. There's just so much more to unpack, but we're going to have to leave it for now. And we thank you. We do appreciate you taking time out this morning.
Great to be with you. Thanks.
Professor Patrick Bond, University of Johannesburg, the Department of Sociology, with us this morning. We're going to go for a break. We'll be back.
Rejuvenating media day by day. This is Salam